Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. The channel continues to grow because of people like you, and if you have not done so, help me out. I'm trying to get to 1,000 subscribers so I can monetize the channel. Hit that subscribe button down below. Hit that notification bell so you're notified whenever we drop any new content. Drop a comment on the video. Let me know what you added to your portfolio this week. All those things, hit the thumbs up. All those things really help out a small YouTube channel like myself grow. It helps with the YouTube algorithm, and it helps to get the word out. On this channel, we focus on dividend growth investing. I do a stock pick of the day series Monday through Thursday. Well, most Monday through Thursdays. I did miss this last Thursday. My company is part of the UAW strikes, even though we are not an automotive company, but it forces us non-UAW folks, non-bargaining unit folks into 12-hour day shifts. Unfortunately for them, while they're working, we have to work, or I guess unfortunately for us, while they're off on strike, we have to work additional hours. But I am typically salary, and with that comes a little change in my pay structure where I actually get overtime, which I don't normally get. But enough about that one. So apologize for missing the Thursday video. I may miss some here in the future. Again, I am working 12-hour shifts until the UAW strike is over. Once it's over, then things go back to normal. So apologies for any future videos I might miss as well. I will not miss any videos on Sunday, portfolio updates. That's what this one here is as well. And then along with the stock pick of the day series, Monday through Thursdays, portfolio updates like this, I do monthly series where I cover the dividends paid out from the previous month. And then I also do a series where I look at stocks I'm going to buy in the upcoming month as well. Again, if you're interested in that type of content, hit the subscribe button down below. Give me a thumbs up and drop a comment down below. Let me know how long you've been investing. So let's look at this portfolio update today. We did add $1,460 in new capital. Let's jump right in. So first up, on September 11th, we did enter in some option plays here. So we did 2 covered calls for NextEra Energy with a $69 strike price that closed out on Friday. This closed out of the money just under, I think it was $68 and some change. So we received $28.92 in premium, and we kept the NextEra Energy shares. So we will probably do exactly the same thing next week. I might even bump this up to $69.50 or $70 strike price, but we will see what it looks like. I need to look at the options premium and see what pays out and what makes the most sense. I am above $69.70. I think I will be in the green on this one, so I think I'll probably set it at $70. And I've received quite a bit of options premium. I've been running this one for almost a month now. So again, I'll continue to do that. I am going to sell completely out of 100 shares, one covered call here completely, and then probably run the other call, but I want to reallocate that $6,900 into another position. And then also along with this, we did 3 covered calls for Bank of America, ticker BAC, and it was a $29 strike price. Again, this one ended the day at September 15th on Friday out of the money, so it was just below this. I think it was $28 and some change. So we kept those Bank of America shares, so we'll probably look to do this one again next week as well. All total, we received $69.31 in options premium. I mean, it's not going to make us a millionaire overnight, but it is adding some additional capital into the portfolio on a weekly basis, so it's nice to see. Next up, we'll jump into the dividends received for the week. We did receive some dividends from Vale, so I've broken this out. As you can see, on September 12th, we were paid $83.72. Now, this is a foreign company, right? Vale, ticker VALE, is out of the material sector. This is a mining company out of Brazil. Actually, they have mines all over the world, but their main headquarters is out of Brazil. So because they are a foreign company, it does come with some tax implications. So I wanted to show that here. So they paid $83.72 in dividends. My brokerage, I use Ally Financial is where I have my brokerage. They take the taxes out for me. So you'd need to see what your brokerage does. Some brokerages take the taxes out right away, some do not, and you're responsible for it at the end of the year. So make sure you talk to your tax advisor on foreign taxes. But for me, they take it out right away. So as you can see, $83.72 paid in dividends. They took out the taxes, $12.56 in taxes, so that left me with $71.16. Now I do have the DRIP set, so that's dividend reinvestment plan, and that means any position in the portfolio, in this case it was Vale, pays out dividends, they go right back in and buy more shares of the company that paid out. So that $71.16 went right back in and picked up 5.20205 more shares of Valet. And that added, those 5.2 shares added an additional $3.61 in passive income. So this is the beginnings of that snowball. In effect, the positions I've already purchased are now, once they pay out dividends, purchasing more shares of those same companies, right? Every time that a company pays out dividends now, it repurchases more shares. That adds to that snowball, and that snowball will get bigger and bigger, faster and faster over time. Whether or not I add any new capital to Valet or not, it will now do it on its own. So very nice to see that dividend snowball in effect. Let's keep on going here. And a lot of weeks, if you've been watching with me for a while, you'll see I do purchases over a couple days, today or this week in general. I did not do that. Again, my workload is shifted a bit. I'm covering some things I don't normally cover at my job. So I just do not have the time to really get in the market as much as I'd like and pay attention as much as I'd like and buy some things, and which is a little not how I typically want to do it. I actually missed Union Pacific down in the 211 range earlier in the week, and it jumped back up to 213, 215. So I didn't purchase any of those shares. But it's just the nature of what's going on in the world right now, and I've got to adjust. So I did all my purchases on September 15th, added the full $1,460.54 here. And with that new capital, we added, this is a new position, 1 share of Haverty Furniture Company's, ticker HVT, and this is actually a little higher than I would like to add it at $31.17, and that's why I only added 1 share. This is really for me to track the company. I want to be purchasing this one back in the under $29 per share, so it's a little over what I would like to, but I wanted to get it in my portfolio so it makes it easier for me to watch. So I will probably not be adding to this until it drops back down below, at least below 30, and preferably below 29 per share. But I wanted to add it in. So this is a new position, ticker HVT, out of the consumer discretionary sector, Haverty Furniture Companies, and picked up that 1 share at $31.17. We added 2 more shares to our Pfizer position, ticker PFE. This is out of the healthcare sector. We picked up those 2 shares at $34.29. 20 more shares to our SBSW, Siboney-Stillwater position. This is out of the material sector, another mining company here. And same thing, I probably, if I wasn't working 12s this week, would have bought this either Monday or Tuesday. And it ran up Thursday and Friday. I think it was 5% gain on Thursday, 5% gain on Friday. I could have bought this back in the $5 range, but it's below my cost basis still. So even with the little bit of a bump up, it has really dropped back. I think my cost basis on this one is around $9. So this one continues to decrease my cost basis, as with Pfizer as well. So we picked up those shares at $6.73, 20 more shares, ticker SBSW. We added 10 more shares to our AT&T position, ticker T. We added those 10 shares at $15.06, another one that is below my cost basis, so I continue to add. Very nice dividend yield on this one as well. Pfizer as well, I think it's almost near 5%, but 4.6, 4.7% on that one. This one is over 7. Realty income continues its pullback down to $54.67, which is where we picked up 2 more shares, ticker O. This is a REIT out of the real estate sector. And another one, my cost basis on this one is right around $62, so I'm continuing to decrease my cost basis, increase my dividend yield on this one. This one has popped up to about 5.4, 5.5% dividend yield. Very nice dividend yield. All these really have very nice dividend yields here. We added 10 more share to Kraft Heinz, ticker KHC. This is out of the consumer staple sector. We picked up those shares at $33.64. Same thing here. Another one still below my cost basis. I'm going to continue to decrease my cost basis, increase my dividend yield, and increase my future potential returns. 10 more shares in Enbridge Inc., ticker ENB. This is out of the energy sector. $35.25 per share on that one. And HPQ, it has been a while since I added anything to this position, but it did pull back again. It is finally back below my cost basis. So we added 10 more shares, ticker HPQ. This is out of the information technology sector, and we picked up those shares at $27.75. And I would like this one here to drop back even a little bit more, $26, $25, even $24 per share. I would continue to add. I'd like to build this out and get it to about at least over 200 shares, if not to 300 shares on this one. I really like this company for the long term. Very nice dividend growth on this one. They are buying back shares. Now, their company overall, selling computers and printers is a bit cyclical. So I don't mind that it's pulled back. And like I said, I'd really like to build this out to about 200 to 300 shares in my portfolio. All total, this new capital, $1,460.54, added $81.53 in additional passive income over the next year. And if you add this 81.53 to the shares of Valet that we saw on the previous page, it comes out to $85.14 in additional passive income over the next year. Again, we added $1,460.54 in new capital, as well as the dividends paid out to get to this number. That is the dividend snowball. When I add new capital and the dividends payout within the portfolio, it just increases that annual income over time, and that snowball just keeps getting bigger and bigger and bigger, and we will see the new total yearly income here in a minute. But before we look at that, we are going to run through the sector weights here. Communications is making up 8.62% of the portfolio. Consumer discretionary, 0.19. It is my smallest sliver. We've got a couple shares of Williams and Sonoma. We just added that one share of Haverty Furniture. So this is a sector that I would like to build out. I am underweight in it, but I'm waiting for the right prices. There's a couple other companies as well I probably will add in at some point. Best Buy is one that I am looking at. There's a couple others in that in this sector as well that I'd like to add. But for right now, I'm hoping for a pullback on Williams and Sonoma back into the 120s. And I'd like Haverty Furniture to drop back under 30, or preferably under 29, but I'd probably nibble a little bit under 30. So that is where I'm at with that one. Just this little sliver here. Consumer staples sitting at 5.42%. Kraft Heinz, I'm adding to that one. I'd like Procter & Gamble to pull back a little bit as well and to build this one back out. But again, I try to wait for the deals. I try to wait for these companies to pull back. It's all about having patience. So even though these are smaller positions now, eventually they will get built out to be larger positions and closely more. I don't think I'll ever have this completely equally weighted, but at least it won't be such a big discrepancy between my largest sector and my smaller sectors here, right? Energy is sitting at 6.88%. Financials makes up 10.31%. Healthcare is my largest slice of the pie at 18.22%. Industrial sitting at 7.94%. Technology makes up 8.32% of the portfolio. Materials is my second largest, sitting at 15.02%. Utilities is at 6.25%, and REITs and real estate is number 3 at 12.83% of the portfolio. You can take a look over here on the right. I've got the portfolio sector weights split out a little different way. You can see the percentages, same here as the pie, but then also how much in funds I have in each position as well, along with the total of the portfolio down here at the bottom. Now, I show this every week. This is the portfolio, full transparency. I want you to see how a portfolio is built out over time, how a real portfolio is built out. This is my portfolio. I want to be fully transparent, whether I'm up or down, whether the market's up or down. I'm going to show this every Sunday morning. You'll see all the positions in my portfolio, how many shares I have. Here's where the positions are, how many shares I have, the current price as of the close of business per share on Friday, the market value, that's again as of the close of business on Friday, my average cost per share here, my purchase price. So this is how much in funds I have in there, whether I'm up or down, right? If it's in the red, I'm down. The percent up or down right here, what sector they sit in, whether they're a quarterly, monthly, or semi-annual payer, the current yield, again, as of the close of business on Friday, my yield on cost. So on the previous page, we saw the sector weightings. Now you can see the sector percentages. Now you can see the percentages of each position which in the portfolio. Ally, for example, makes up 3.7%. Bank of America makes up 6.61% of the portfolio. I don't like any one position to be over 10%. So you can see here Johnson & Johnson is my largest position right here. So that's about, I'd like to get this to 100 shares, but then I would probably back off it a little bit. I don't, again, like any one position to be over 10%. Now, if a position runs up, like for example, if Johnson & Johnson was to shoot back up to 170, 180, it would probably take it to about 10% or more. Doesn't mean I'm going to sell. It just means I would stop adding to the position and add to some others to try to weight it back out. And then in this column, you can see the estimated annual income, what months they pay out. The year-over-year dividend growth is in this column, and where it sits within 15% of its 52-week low. And I use this. Let's look at Haverty, for example, since I just added this in. And again, Haverty is sitting at $30 as of the close of business. I bought it at 31 17, so I could have even got it a little cheaper at $30.91. It did drop back after I bought it. $30.91. Well, let's just use $30.91. That is lower, right? Here's where it sits at $28.59. 15% of its 52-week low. So preferably, I would be purchasing it at $28.59 and below. That's where I would be at with this one, right? So it is currently above my cost basis. So this gives me two things. I can continue to decrease my cost basis now and try to get it at this $28.59 or below, or I just don't add to it. And that is my plan. I'm not going to add to this position. This is to put it on in my portfolio so I can watch it a little better. That's why it was just one share. And when it hits this 28.59 or below, then I will start to build out this position. So that is the idea behind 15% of its 52-week low. I want it at 15% of its 52-week low or lower when I'm building out the position. Now let's run through totals here. Total shares, 4,895.666 shares. Market value of the portfolio sitting at $169,103.60. I am down. I do have $172,244.59 into the portfolio. I am down $3,141 or 1.82%. Current yield is sitting at 4.629%. My yield on cost is 4.545%. And this is really what it's all about, whether the market's up, whether the market's down, whether the market is floating sideways. This continues to increase week over week, month over month, year over year. New record sitting at $7,828.13 in passive annual dividend income right here. Dividend growth of the overall portfolio is 8.31%. So realistically, if I was to stop adding any new capital, this portfolio, depending on how fast the positions change over time, the dividend yield overall would grow at 8.31%. So this number here should increase by 8.31% based on the current percentages within the portfolio. Well, that is it for this one. Let me know what you purchased in your portfolio this week. It was a mixed bag. Beginning of the week was a bit of green, but then towards the end of the week was a bit of red. So mixed bag overall. And let me know if you're impacted by the UAW strike. Maybe not directly, or maybe you are directly. Are you a UAW member that is on strike, or are you potentially one of the many, many suppliers that deals with the UAW, that deals with the big three? Maybe you supply their products as they build out the cars, and your company is being impacted by the strike. My company is. My wife works for General Motors. She definitely is. So I'd be interested to know, are you being impacted by the UAW strike? Has it changed your working hours like me? Like I said, typically I work 8 to 10 hours a day, but now we're on 12 hours, 5 days a week. I think actually we might have even had a couple people in my group that had to come in this weekend to get checks out. That is just the nature of it, the business that I'm in. So hopefully you are not impacted and you are just having a great weekend and everything is normal at your house. But at my house, the UAW definitely has shaken things up a bit. So hopefully it doesn't drag out for too long. Well, I don't want to ramble on. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notifications bell. Most importantly, subscribe to the channel. It really does help me out. Join the vested interest community. Join us on this journey to financial freedom, building a community of like-minded dividend growth investors so we can share our experiences, share stocks that we're watching, portfolio updates like this I share every week. So come on back and check it out again next Sunday. And don't miss the Stock Pick of the Day series that I do Monday through Thursday. Hopefully I can get that out every day this week. If I miss one, apologies in advance. And drop a comment down below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a stock you'd like me to cover in the Stock Pick of the Day series, go ahead and drop that down below and I'll work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you're having a great weekend, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. Akin money should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.